Don't listen to these people. They're full of it. And I think they need dollar liquidity soon. And I think you'll see it from the Treasury before this year's over in a major way. It is Janet Yellen who is in charge, not Jerome Powell. If the Fed didn't cut, I wouldn't be that surprised. We're living in a fiscally dominant time. And I think that Janet Yellen is going to try to find a way to buy herself and the United States some more time by giving more dollar liquidity into the market. The S&P 500 is still up 20%. Bitcoin's still up 100%. These are still inflationary times in assets despite rates going up. Gold is still up in the face of a hawkish Fed. I smell bull crap. I don't know if I can curse. I smell bull, right? They need assets to go higher, especially in an election year. The only thing that actually matters is making sure that the debt crisis the United States is in doesn't collapse this country and the world reserve currency. And that is more Janet Yellen's territory. So she's going to provide the dollar liquidity. The US is going to create a massive asset bubble because they have to, and inject so much dollar liquidity into the system because they have no other choice. What's the only thing they can do? Devalue the thing they owe, print money, debase the currency. What's the scarcest thing in human history? What's the best performing asset in the last 15 years? What is the best expression of currency debasement? What's a put option on the existing financial system? What is long volatility? How do you monetize this chaos?
On the Spot with Michelle Makori is brought to you by Swan Bitcoin.
Hello, I'm Michelle Makori. Thank you again for joining us. Financial markets are flashing a higher probability of an oncoming recession, but are still predicting a soft landing ahead. Models from Goldman Sachs and JP Morgan Chase show that the market implied odds of an economic downturn have risen significantly. According to Goldman, equity and bond markets are assigning a 41% probability of a US recession, up from 29% in April. A similar model by JP Morgan calculates the odds to be at around 31%, jumping from 20% since the end of March. So while chances of a recession are higher, the forecast, though, is still for a soft landing. And the recent strong retail sales report and cooling inflation data are helping to ease the market's recession concerns. Well, here to help us get through the noise and understand what is really happening with the U.S. economy in the near term and the long term, and what it all means for equity markets and Bitcoin, is Jack Mallers. Jack is the founder and CEO of Strike, the global payment Bitcoin app. And prior to Strike, Jack was one of the first application developers on top of Bitcoin's Lightning Network. Jack was also honored on Forbes 30 Under 30 list in 2019. And Jack, it's an honor to have you here on Kitco. Welcome.
It's an honor to be here. Thanks for having me. And by the way, in that introduction, I think that financial authorities are full of it. So I'm pumped to talk to you about it. Let's get into it.
This is why we have you to help us break through the noise, assuming the data is accurate in the first place, and get your take. And I do want to get your macro outlook. I know long term, you're saying we're in a sovereign debt crisis. But before we get into that and unpack that, let's take a look at the near term and the economy and some of the data that we've just had come in. So we did have markets, of course, have that major sell-off 2 weeks ago, Monday, August 5th. Wall Street saw its worst day since 2022. Heightened recession fears after the labor market started to show signs of weakness. And then, of course, the unwinding of the yen carry trade following the Bank of Japan's recent rate hike. Now, since then, Jack, markets have rebounded, and they've rebounded following the sell-off. We did have a slightly better employment data with initial jobless claims report coming in more positive than expected. I just mentioned we had a strong retail sales report where, according to the Commerce Department there, the value of retail purchases rose by 1% in July. Last month's inflation numbers are showing a cooling in inflation, with the CPI index rising by 2.9% on an annual basis in July. U.S. producer prices rising less than expected in July. So, Jack, assuming we take this data at face value, and clearly there are concerns at how this data is compiled in the first place and what metrics are used and then often revised. But assuming we take it at face value, what's your near-term macro outlook here?
Yeah, so I think it's irresponsible to take a lot of this data and a lot of their language at face value. Inflation was transitory until it wasn't, right?
Valid point there, Jack.
A soft landing is soft until it's not. I think that the unwinding of the yen carry trade and what we saw from Japan trying to raise rates just barely is just how trapped and just how in trouble central banks are globally, and specifically the United States is. What, in my opinion, the US cannot afford a stronger dollar. The US now cannot also afford a weaker dollar. What is a stronger yen? A stronger yen is another way to say a weaker dollar. So I don't think the US can afford a weaker dollar. I don't think the US can afford a stronger dollar, which I can explain, but that leaves them trapped. And I think what we're seeing right now is liquidity dry up in the dollar, and you're going to see in the near term liquidity from the Treasury. I think we're living in a fiscally dominant time. And I think that Janet Yellen is going to try to find a way to buy herself and the United States some more time by giving more dollar liquidity into the market. And so you can think of dollar liquidity like a swap line. You can think of dollar liquidity like the bank term funding program. So what I think we saw is the dollar weakened against the yen, trouble, unwinding of a carry trade. If the dollar strengthens, it's an unwinding of another carry trade, which dollar strengthens. Those that hold dollar debt all of a sudden have a tough time financing that. You sell what you can, not what you want. All these foreign entities own treasuries. You sell the treasuries, the yields go up. The yields go up. U.S. solvency is now questioned. They print money anyway. So they're stuck. They're stuck. And so the idea that it's soft until it isn't. Don't listen to these people. They're full of it. And I think they need dollar liquidity soon. And I think you'll see it from the Treasury before this year's over in a major way.
Right. And again, I will get into the biggest sovereign debt crisis picture. Of course, it's all linked. And I do recall in a previous interview, you've made the point that Janet Yellen is in fact Fed Chair Jerome Powell's boss, and that he's not acting as an independent actor, even though in theory the Fed is supposed to be. So let's just focus quickly on the near term and what you expect from the Fed in the next meeting, and in terms of seeing a rate cutting cycle in the second half of the year. What do you expect that?
Well, you know what? If the Fed didn't cut, I wouldn't be that surprised. I know the market is pricing it in, but again, if the yen strengthens or the dollar weakens, it's the same outcome, is that there's a massive carry trade capturing the spread of those two currencies. And so no one knows if the Fed cuts by 50 basis points, if they're going to trip up financial institutions and cause a cascade, right? So if the Fed actually didn't touch anything and said, hey, CPI came out supportive, we're going to need to see more jobless claims to actually take action, that wouldn't surprise me. But I think what people mistaken is the price of money, which is interest rates, versus the quantity of money, which is the amount of dollars printed. They can still print and cause asset inflation without moving rates. So I'm lesser concerned. I actually don't care as much about the rates because, as I said, the US is stuck. Stronger dollar, bad news. Weaker dollar, bad news. They need to find dollar liquidity. So we've had rates 5%, 5.5%. People are making a lot of money. Tether's making a lot of money on those short-term T-bills, but the S&P 500 is still up 20%. Bitcoin's still up 100%. These are still inflationary times in assets despite rates going up. Gold is still up in the face of a hawkish Fed. I smell bull crap. I don't know if I can curse. I smell bull, right? There's no way that they're actually tightening and they're letting the chips fall where they may and correcting a lot of the leverage and bubble nature of assets. They need assets to go higher, especially in an election year. Listen, the last thing I'll say is if you look at the receipts of the government, how are they funding the interest that they've accrued? How are they financing this debt? They're financing it on capital gains. They're financing it on the S&P 500 going up. They cannot afford the S&P 500 to go down. It is a number go up at all costs. And so I think in the near term, you will see liquidity not necessarily coming from rate cuts, but coming from the Treasury, fiscal dominance. It is Janet Yellen who is in charge, not Jerome Powell. If Jerome Powell was in charge, he would focus on his 2% target. He would keep squeezing this market. He would let things go and solve it. He would let the chips fall where they may, and he would be on a warpath to get inflation back down to his target. That's not what's happening. We are living in a fiscal dominant time where the only thing that actually matters is making sure that the debt crisis the United States is in doesn't collapse this country and the world reserve currency. And that is more Janet Yellen's territory. So she's going to provide the dollar liquidity just as she has been. How is Bitcoin and the S&P performing so well with the fastest rate hike ever? Where'd that liquidity come from? It came from the Treasury. It will continue to come from the Treasury. So I think you see higher S&P going into the election. I think you see a massively higher Bitcoin before this year's over. That's my prediction. I'm sticking to it.
All right, Jack, a lot to dissect and unpack over there. Firstly, your first point, you do not see Fed Chair Jerome Powell hiking in September?
I just don't know if they're going to touch the rates. I think when people say they're going to cut by 50, they're going to I think that they're scared.
Cutting rather, not hiking. You do not see Powell
Right.
cutting in September.
I think they're scared. I mean, Japan raised by 25 bips and tripped up a cascade of asset sell-off. So the question is, it's like a snow avalanche. You just don't know what is it, 25 bips that's going to tip markets, 50, 100. At what point are you cascading down all the carry trades, all the leverage, and ensuing a financial crisis that, once again, the United States can't afford it. They're in too much debt. They have to finance this debt. They finance it by asset prices.
Right.
They create these bubbles in assets. So
Jack, just to clarify for our viewers, your concern that you're saying if the Fed cut rates, what that means obviously for the Treasury market, right? That's your issue there, because obviously equity markets are wanting to see a rate cut. You're worried about what that means in terms of the U.S. being able to sell its debt to finance its debt and the appeal that it has at a 5.25% to 5.5%.
Yeah, well, I think actually let's just take a step back and try and simplify for the viewers. So a stronger dollar is a problem. Why is a stronger dollar a problem? Where there's lack of US dollar liquidity in the market. It puts a lot of pressure on foreigners that own US denominated debt. If you can't have access to dollars and you owe dollars, all of a sudden you need to finance that some other way. The primary way that foreigners finance that is by selling treasuries. By selling their treasuries, the yields go up, the US solvency, because of all of the debt, is in serious question. And the only way out would be to print money. And in an extreme way, you'd land that all on the Fed's balance sheet. That is why, rates going up, but gold going up, that's not normal. That is emerging market behavior. That is a market saying, we don't believe in the deficits. We don't believe in the fiscal situation. We are scared. We don't believe it. So the dollar going stronger and the dollar liquidity going down, not good. Okay, what about a weaker dollar? Well, a weaker dollar is another way of saying a stronger yen. What happened when the yen strengthened? Not good things. A lot of carry trades unwinded then. So if you weaken the dollar, you're in a really bad spot. That arbitrage trade of borrowing yen, borrowing weaker currencies and buying US assets, that's going to unwind. If you strengthen the dollar, then the sovereign debt crisis is going to unwind. And so you're stuck in a pickle. How do you buy yourself time? You buy yourself time by finding dollar liquidity. And so far it's been through the Treasury. So it's not been through manipulating rates, and it's not been yield curve control or anything crazy like that yet. They've been buying themselves time by Janet Yellen finding dollar liquidity through the Treasury. And so from a high level, that's why you strengthen the dollar, Treasury sell off, US crisis in are we solvent? You weaken the dollar, same thing. We weaken the Japanese weaken the dollar, quote unquote, strengthen the yen barely. And the S&P 500 was down 10% in a trading day or whatever, 8%. So hopefully that makes sense.
Well, on the yen carry trade, I think we need to sort of be a little bit clearer there, because that was when the Bank of Japan raised rates for the first time in more than a decade, and changing from a negative interest rate policy, and essentially having rates so low with the yen, it allows people to borrow in Japan at lower rates and then invest in higher yielding assets elsewhere. And that was working as long as the Japanese interest rates remained so low. So you could borrow cheaply, practically for nothing, and then invest in other global assets. But then a sudden appreciation in the yen against the dollar over the past turned many of these trades into losses. And then you had to rush to close out your short yen positions, and that, of course, impacted emerging and developed markets there. So, I mean, that was a move by the Bank of Japan that was arguably, in a way forced upon it by the Fed. And certainly that's the view of one of our previous guests, Ed Dowd. But Jack, if you have this argument that keeping rates as high as they are, you're going to break the economy. You're going to break the markets. You're going to break commercial real estate. You're going to break all of the factors that are involved in terms of borrowing money on a sort of domestic economic level, for one. And then you also have the issue of the U.S. not being able to service that debt that it already has with rates so high. So with that in mind, why are you leaning towards the idea that we're not going to see a rate cut?
Well, I just think that they're scared. If we did see a rate cut, it wouldn't surprise me. But if we didn't, it wouldn't surprise me. I think the point is they're scared. Really what, traders are doing is they're arbitraging the difference between Japan at negative rates or zero rates versus the US at whatever, 4, 5, whatever, rates higher. They're arbing that. And so if you bring that window down, you're going to take liquidity out of that trade. So just seeing how much markets got tripped up by Japan at 25 basis points hike, I think it was scary for them. And to answer your further question of, yes, rates this high for much longer is surely going to collapse the economy. You're right. What do they need to buy themselves more time? They just need liquidity. They need dollar liquidity. And I think that's where they're going to go. Like, they could unwind the yen carry trade on the Fed's balance sheet, for example. They can open a swap line, say, here, take as many dollars as you want, sell those dollars, finance the unwind that way, and realize all of that on the Fed's balance sheet. So I think you're going to see liquidity come from the Treasury. But again, under the context of fiscal dominance, you're talking about a Treasury and a Federal Reserve that's focused solely on making sure that the United States debt situation doesn't collapse the world reserve currency. And I think the only way out is through. You can't go up, you can't go down, you got to go through. And through is printing and debasing the currency. It's currency debasement. That's kind of my full thesis. And listen, a stronger dollar, you own right now, like traditional macro. I don't know how many of your listeners are Bitcoiners, but stronger dollar, you want to own gold because rates go up, gold goes up. Why? As we just described, treasuries sell off, yields go up, US solvency is in question, and you want to own gold because they're going to have to print. Weaker dollar, lower rates, or more liquidity from the treasury. You also want to own gold, right? That's very bullish for assets. They're going to cause another asset bubble, probably like they did from 2020 to 2022. Bitcoin is the better version of gold. It's the more performant version of gold. Bitcoin is the best expression of currency debasement, in my opinion. It's the only release valve left. It's the only smoke alarm alive today. And so my macro thesis has been stronger dollar, bullish Bitcoin. Weaker dollar, bullish Bitcoin. How is that possible? It's because the deficits are far too big. They've gone too far. And they're buying themselves time through dollar liquidity at the treasury. And Bitcoin's gone from 18K to 60K with rates gone up. How is that possible? Someone's providing liquidity for these assets. It's Janet Yellen. So the TLDR for me is hold Bitcoin. It goes up no matter what, because you're talking about a financial system that's untenable, and the only way out is by debasing the currency.
So when you say dollar liquidity, are you saying more quantitative easing? Is that how they get more dollar liquidity out there? If we're keeping rates high potentially, how does this dollar liquidity happen?
I mean, I think quantitative easing and tightening rates, these are all known verbiage and language for the populace now. Even the grandmother on the street that's in the Whole Foods line with me knows what inflation is. And so I think you're going to see different 4-letter acronyms that mean, Janet Yellen's going to come up with the ABCD funding program to make sure Vladimir Putin doesn't harm you and to make sure that Japan doesn't hurt your stock portfolio. And that's inflationary, right? So I think they're going to just swap lines are inflationary. Bank term funding programs are inflationary.
Right.
I think they're going to find ways to inject dollar liquidity and leverage probably the commercial banking balance sheet to hold some of assets that no one's willing to hold right now, whether that's accounting tricks. But if I'm a listener right now, the takeaway is it's all the same. They cannot fix this problem. They can only print through this problem. Let me just give an example. If I owed you let me try and think. If I owed you 20 Taylor Swift tickets, so this is, could clip this, send this to your family, this will be understandable. If I owed you 20 Taylor Swift tickets, in theory, I have two options. I can either pay those back in full by giving you the tickets, or I could say I can't afford to pay that back, and we call that a default. Two options when you're in debt: pay it back or default. And I say, I'm so sorry, I can't actually pay that back. Now, the government has a third option. They can actually devalue and debase the thing that they owe by printing money, right? So if I could say, well, Taylor Swift tickets at one point were like $20,000 a pop. If I can make them $2 a pop, I can pay you back 20 Taylor Swift tickets, no problem. I'll just devalue what they're worth. And so the US government has a third option, which is printing currency, debasing the currency, and that's their only way out. So the US government cannot default. That is not an option, right? And they also can't pay it back. Debt to GDP in the US is almost 130%. Global debt to GDP is well over 300%. So that is the amount of debt they have versus the amount of growth they're producing to pay that back. Paying it back is not an option. Defaulting is not an option. So anyone listening, what's the only thing they can do? Devalue the thing they owe, print money, debase the currency. What's the scarcest thing in human history? What's the best performing asset in the last 15 years? What is the best expression of currency debasement? What's a put option on the existing financial system? What is long volatility? How do you monetize this chaos? You buy Bitcoin. You buy Bitcoin. That's been my macro thesis from day one, and that's my Taylor Swift analogy. Bam, clip it.
All right, let's, well, by the way, what's your favorite Taylor Swift song then?
Oh, geez, I don't have one. I apologize to Taylor Swift. I got her involved in Jerome Powell and Janet Yellen. Not her fault.
Exactly. Well, I'll give you an out. Go with blank space, and it also fills in the idea here because the Fed has to fill a very big blank space with all of this liquidity that it needs to inject.
That was clever.
So, Jack, again, I want to go big outlook in a minute, but you started to say that you see markets performing well towards the end of the year. Just break that down for us.
Yeah, well, like I said, I just think that the Treasury is going to find a way to increase dollar liquidity. That liquidity is going to realize itself in the S&P 500, in Bitcoin. I think Bitcoin ends the year at around or above $100,000 per coin. And I think the S&P keeps chugging along, especially in an election year. Like, where is all the wealth? All the wealth is with the boomers and that age class. They all have a big stock portfolio. And again, if you look at how the US actually finances its interest payments and pays down a lot of this debt, it's through asset bubbles. They create asset bubbles. Yeah.
Wouldn't the markets sort of turn negative if they don't get the rate cuts that they're hoping for? Wouldn't you see some kind of equity market reaction there?
No, I think that, well, potentially in the short term, potentially, right? We saw Bitcoin come all the way down and trade in the 40,000s for a second before rebounding right back. I think Bitcoin is the only, as I said, only smoke alarm left. It's the only escape valve left. It's the only truly 24/7 global free market. And so what Bitcoin does phenomenally, better than anything else in the world, is tell you the liquidity situation. As soon as Japan tried to hike rates, Bitcoin ran down. And that was a scream to there's not enough liquidity to support assets. And then as soon as Japan came out and said, oops, that was a mistake, we'll never do that again, then Bitcoin rebounded. And so I think, what you'll see in assets more broadly, but Bitcoin specifically, is there liquidity? Is there debasement coming to the currency? Are they injecting more dollars into the system? And so my expectation is they will. And so I think Bitcoin will outperform and Bitcoin will be a leader, but of course the S&P 500 will follow, no doubt.
So you talked about the elections. Does it matter in terms of Bitcoin's performance who wins the elections? Because we know that the Republicans and certainly former President Trump has been very supportive of Bitcoin. He came out being a big Bitcoin supporter, admittedly a flip or reconsideration from a previous position. But, in the world of Bitcoin, people often change their mind once they get more data. And since then, we've had pandering from the Democrats. We just had the Democrats have a Crypto for Harris virtual town hall to show support there. And We've also got Senate Majority Leader Chuck Schumer saying that there could be a crypto law passed by the Senate by the end of the year. We've had a change of tune, basically, from the Democrats on this one. As far as Bitcoin is concerned, does it matter? Do you think one party is better for Bitcoin? Do you see Bitcoin performing differently depending on whether President Trump wins or Kamala Harris wins?
No, I don't. I think Bitcoin, I love the Arthur Hayes quote, Bitcoin equals technology plus fiat liquidity. At the end of the day, it's superior monetary technology, and its performance is a direct reflection of fiat liquidity or currency debasement. It doesn't matter who's in office. It doesn't matter which party or which side, left, right, blue, red, up, down, doesn't matter. The only way out is through. The only way out is currency debasement. And I think Bitcoin goes up no matter what. I will say, as an entrepreneur, born, raised, and currently operating in the United States of America, I love the things Donald Trump is saying for my business. I would love if the United States of America was progressive for Bitcoin, was inviting to entrepreneurship, innovation here, if the Bitcoin Act proposed by Senator Looms was passed and we started building a strategic reserve here in the United States. Don't get me wrong, I would love that. And I would love if Donald Trump was also influencing Harris to actually pick up a lot of the same policies. And I think it's unbelievable, almost to the sense of the definition, hard to believe that a white paper that was leaked to a mailing list 15 years ago is now at the center of one of the most important presidential elections in United States history. That's unbelievable. I love what Trump is saying, but am I bearish or bullish depending on what politician is in the White House? Of course not. I'm bearish the current financial system. I think the dollar and its hegemony and this coming sovereign debt crisis, all of it's untenable. And that's going to be reflected best in Bitcoin, in the BTC USD price, no matter who's in office.
Right, but we did see some very, very dramatic developments with regards to Bitcoin being potentially made a strategic reserve asset, as you said. That's what former President Trump pledged to do at the Nashville conference. And, you know, a lot of people don't realize that the U.S. actually holds more than 200,000 Bitcoins. It's one of the world's largest Bitcoin holders. And as you just mentioned, we had Senator Cynthia Loomis of Wyoming saying that she wants to introduce a groundbreaking bill aimed at creating this national Bitcoin reserve. Do you see that happening should, let's say, the Republicans win?
Yeah, I think even if the Democrats win, it should happen. Why should it happen? We need to address the fiscal deficits. Like, what are we talking about? The debt is untenable. You know, in the beginning of our conversation, we're talking about just like, no matter what, the U.S. is in trouble. You want to raise rates, you want to lower rates, you want to work with Japan this way or that way. Right now, the policy is, please, nobody sell your treasuries. We can't afford it. Everyone hold on tight. We have to figure out how to land this plane. And a sign of confidence is backing a lot of your deficits, your debt, with something hard and something real. And we talk about things like global debt to GDP or even domestic debt to GDP here in America. That deficit is, that ratio is bad. 120, 130% debt to GDP, not good. 350% global debt to GDP, very bad. You need to find more growth. You need to find more real hard assets. And so by building a Bitcoin strategic reserve, listen, over the last decade, Bitcoin's annual average return is 63% year over year. It is not only the best performing asset over the last decade and the last 15 years, it's the best performing by far. It's not even close. And so what do you want to do? You want to back your deficits and back your future promises with that thing. You get to just buy that growth off the shelf. And so the only thing that's outgrowing the amount of money our government is spending is Bitcoin. How do you solve the deficit problem? You own something that's growing faster than the White House can spend. That's Bitcoin. And so I think no matter who's in office, it's not like a partisan issue. It's just a great idea. It's just a fundamentally good idea that should give confidence to the world of, okay, Someone in that country is doing math. Someone in that country understands the gravity of the problem, and someone in that country is working on it. I think that's the only message we want to send, not only to Americans, but to the world. And it's just math.
Well, Jack, just to push back and play devil's advocate here, if the US does make Bitcoin a reserve asset, doesn't that then signal its own lack of trust in the US dollar? Doesn't it then admit that there's weakness in its own currency? And it jeopardizes the image of the world reserve currency, which is, we're already seeing a significant pushback from countries like the BRICS with de-dollarization trends. So, I mean, essentially, if the US dollar is backed by the full faith and credit of the US government, and then the US government goes and buys Bitcoin or makes Bitcoin a reserve asset, does that not signal that they have lost faith in the full faith and credit of the currency? I mean, a lot of this is sort of a messaging game. A lot of this is fugazi, as they said in Wolf of Wall Street. A lot of this is illusion and keeping up that appearance. So if the US sort of then says we have to, in a way, start to build up a Bitcoin reserve, not to necessarily back the dollar, because I don't think they would ever explicitly come out and say that, that sends a very bad signal in terms of how the US sees its own reserve currency, wouldn't you say?
Yeah, I'd agree with everything you said. I think that Senator Lummis is doing a phenomenal job at the positioning of her bill because it's a strategic reserve. So the United States holds strategic reserves for many things, some of them monetary, like, for example, gold. And the idea of a strategic reserve is, as it says in the title, is, strategically in case we need it. And so I think that the messaging and the idea is, listen, we understand deficits are a problem. We understand that financing the debt that we have and eventually paying it down in full is something that we need to work on, and we need to show the world that we have a plan, that we're iterating, we're leaning into technology, we're thinking about the future. And I think we just build a strategic stockpile, a strategic reserve that we can lean into if we need it. I don't think that we would say we're going to start financing our interest payments based on our Bitcoin position in 12 months. I think it's over the next 5 years, we're going to build a strategic reserve in the case that we need it in the future. And if we ever run into issues, we have this highly performant asset that's built on revolutionary technology that's positioning itself to potentially be part of the future of finance. And the United States owns a material position in its fixed supply. I think that messaging gives a lot of confidence to American citizens and to our global counterparts, as opposed to scare them and say, oh my goodness, I better run out of the dollar now. I think, in fact, it's the opposite.
Why would the US then not just print money and buy Bitcoin? I mean, you can print as much as you want. You have an infinite amount of dollars for a finite amount of Bitcoin. I know the current conversation is about using the stash that comes from confiscation due to illicit activities, but you could, if you're the US government, you could print as much money as you want and buy up all the Bitcoin, for argument's sake.
It's a very good question. So I think, listen, I would like to see the United States build a position not in confiscated Bitcoin, right? I think we have to respect property rights here in the United States of America. You cannot just steal other people's things and claim it as your own. I really would not want us to build our position that way. I also think printing dollars to buy Bitcoin, the reason that they're not doing that is, of course, there's dangers. There is, you are building a Bitcoin position with money you can print in something that's hard and scarce. That makes sense. But you're hyperinflating, all of those that hold dollars and dollar denominated things. And so that's the fear is, so I think Lummis's proposal is very clever, is that you're going to use excess reserves at all the Fed banks and basically roll over excess reserves in other assets and other currencies and into this new thing that's performing so well and is the hardest money we've ever seen. So it's taking existing capital as opposed to printing new capital. Now, listen, as a Bitcoiner, do I think the US should look into ripping the Band-Aid, printing money and buying as much Bitcoin as they can? Quite possibly. But that is the type of activity that I think, going back to our last topic, would potentially destabilize the dollar, and people would lose a tremendous amount of confidence in the dollar, and all of the both United States citizens and everyone around the world that operates on the dollar would go through almost like a hyperinflationary time because of their rapidly debasing against a specific hard asset. So That's why I think that's not been proposed and on the table. And I think the first step to build confidence in the dollar and in the United States is just saying we recognize the situation we're in. We also recognize this unbelievable technology that's the best performing asset in human history. A lot of its innovation is in America. A lot of the companies are in America. Hey, why don't we lean into this thing and signal to the world that we're about technology, freedom, democracy, innovation. And this is actually a very American idea to build a strategic reserve in this new tech. That's what I think the first step is. And, if the Fed wants to call me and get my advice on how to print money to buy Bitcoin, I'll answer that phone call, but I think it's probably a bit early.
Well, I want to get into the game theory of what it would mean if this actually became a U.S. move officially. But before I do that, with regards to this Bitcoin stash, there's some questions there because according to data from Arkham Intelligence, there's some moves to move this onto an exchange. We've got a Bitcoin wallet, connected to the U.S. government. Reports that over 10,000 Bitcoin were transferred to Coinbase Prime. And this follows a 2 billion Bitcoin transaction by the U.S. government in late July. And this is now causing speculation that the current administration wants to sell the U.S. Bitcoin before Trump gets into office, or take it off the table, or sort of nullify Trump's election promise to keep it and make it a Bitcoin reserve asset. So what's your take on this? What do you make of the reports that, Bitcoin has now been moved from one wallet to a Coinbase exchange?
Yeah, well, because it's been moved doesn't mean it's been sold. So I do think that the speculation is a bit misleading because the US government and Coinbase did come out and say that they forged a new relationship where I think Coinbase is going to be the sole custodian of those coins. I believe that's the case. But the point is, I don't know, nor does anyone else. So the idea that we're very confident that the current administration is dumping Bitcoin, I'm cautious to lean into that speculation. I think it's misguided. I do think that the current administration, has a lot of questions to answer to all of us. We know Trump's stance. We know Trump's proposals. We know Looms' proposal as a Republican, obviously, Republican senator. I think everyone's eager to hear from Harris. I think if Harris would come out and say, this is my stance, we still have the Bitcoin, this is what we're doing with it, and this is our plan, that the market would appreciate that, to put it lightly. So I think the speculation and the reaction to the coins moving is more a reflection of the lack of support we've gotten from the current administration and potential future administration, rather than an actual market event that we should be concerned about. I think it's just an expression of frustration.
Jack, I think a lot of people want to hear from Kamala Harris, and not just about Bitcoin. They want to hear from her in general about so many things other than at a rally and reading off script.
I'm no political expert, but she should probably do an interview if she wants to run the country. But I don't know. I stick to Bitcoin, but I agree.
But yeah, it's not just on Bitcoin that people are curious to get some clarification. But let's go back to this thesis of if it does become a strategic reserve asset, what happens then in terms of other central banks or other countries, other sovereign nations following suit?
I think they follow suit immediately. I think Bitcoin's price goes up. I mean, listen, the reason Bitcoin's so performant is because it's fixed supply. It's the only fixed supply asset in the history of our species. Gold is scarce. Gold's not fixed. If we need to find more gold, we can. If you want more Bitcoin, you can't. And so I think everything bleeds from that core conceptual idea. And so the whole point of a decentralized currency or distributed ledger technology, the whole idea is distributing the monetary policy, making the monetary policy resilient from any central control or change. And so it's natural that every individual will want Bitcoin, every corporation will want Bitcoin, every government will want Bitcoin. Finding the hardest monies compete over their monetary policy. The harder monetary policy wins. You see this. Look up a Nigerian Naira chart priced in US dollars. Which currency wins over time? The harder one. That's the dollar. So now look up a US dollar chart priced in Bitcoins. They look the same. all that's happening is a more dominant, harder monetary policy is competing and beating weaker monetary policy and currencies. And so I think the US government, no matter who's elected, will find themselves owning Bitcoin because it's natural to own the harder money always. Look at the history of gold. Gold at one point was the harder money, and that's why so many people, including central banks, own it. And I think it's natural that governments start owning Bitcoin. You're seeing the adoption in the individual level, at the corporate level with companies like Michael Saylor and MicroStrategy. And I think you'll see it at the nation state level. It's just only natural.
Well, we are seeing increased adoption from more traditional players. News came out that Goldman Sachs had made significant investments in Bitcoin ETFs, around 400 million worth, according to a recent 13F filing. And again, this is a big turnaround for Goldman Sachs because they used to say that their clients were not interested in crypto, saying the chief investment officer saying that we don't think it's an investment asset class. We're not believers in crypto. Well, the recent 13F filing tells us otherwise. And we also had, other traditional players like the state of Wisconsin. The investment board there has significantly increased its holdings in BlackRock's iShare Bitcoin Trust. Oh, I bet that's according to an SEC filing there. So we are starting to see it become more mainstream as a store of value. You keep on calling it a hard money. And so I want to go back to this idea of, can it function as a store of value, as well as a currency, as well as a money, as well as a unit of exchange?
Yeah, of course. I don't think it's failing at any of those. In fact, I think it's succeeding at all of those. Depending on your use case and the context in which you live, maybe it's succeeding lesser than others, but I think Bitcoin is performing as the best money in human history ever since it was invented. That's in storing value, protecting purchasing power, increasing purchasing power. It's 24/7, 365 liquid. It's the only true free market we have left in the world. I can move it instantly and at no cost anywhere on planet Earth from my phone. The property rights it guarantees for me it's not comparable to any other asset. I can physically store the Bitcoin in my brain. How would I get a gold bar in my brain? Through my ear hole? Impossible. I can memorize 12 words, and that's physically owning the Bitcoin. So across all properties that you would want in a money, storing value, protecting purchasing power, ability to move it, cost to move it, it's 100 out of 10. I mean, and by the way, might I say that this is what technology and a technological innovation and a revolution looks like. It's the same thing. It's harnessing energy and technology to enable more human flourishing. That's what we're seeing. We saw it with the internet, you saw it with the radio, you're seeing it with money. And so it's just superior tech. That's why I say Bitcoin equals technology plus fiat liquidity. It's going to continue to go up because it's superior money, superior monetary technology, plus we're living through rapid currency debasement of the existing system is just untenable.
So a couple of points just to play devil's advocate here, Jack.
Yeah,
in terms of the store of value, people come out and say, how can you call Bitcoin a store of value? Because it always drops the minute there's some kind of major market moving event, be it the August 5th sell-off, be it any big geopolitical development. We've seen Bitcoin drop on any kind of dramatic, either macroeconomic or geopolitical development. And then the Bitcoin naysayers say, how's that store of value working out for you when it has often a double-digit percentage drop in a very short amount of time? What do you say to that?
I think that volatility is vitality. Volatility is natural. Volatility is necessary. The only reason anyone's interested in Bitcoin is because of the volatility. Listen, if I were to walk into a building and I'm on the ground floor and I want to get to the penthouse, how would I do that without quote unquote volatility? I need to go up somehow. And sometimes going up implies going down a little bit at time. What do you want the thing to do? It's a true free market. It's going to express the realities of the world. Just to make the point, no volatility is unnatural. There's constantly entropy in the universe. The universe is chaotic. Central banks have progressively tried to take price volatility out of everything. That is unnatural. That's not a natural thing to do. Think of it like a river and you build a water dam. Like the water wants to flow, the water wants to move. You're unnaturally preventing the universe and the water from getting to where it wants to go. And then every time the dam breaks, right, like the central bank trips up, then you see massive financial crises, massive volatility, because that's the world's naturally trying, the markets are naturally trying to be free. And so all you're seeing in Bitcoin is a reflection of the world. It's natural and it's volatile. And that's why you would want to own it. That's the whole point.
Wouldn't you say that a store of value is not supposed to be volatile, is the argument that's made?
No. If my grandfather bought a house for $10,000 and now for me to buy that same house costs me $1 million, I would hope my store of value is volatile. If my store of value stayed at the same dollar price while the dollar's rapidly being depreciated against other assets, the thing has to go up. It has to be volatile. So
well, go up and down. So you're saying you don't see volatility as necessarily negating that argument, assuming it maintains past a certain base level.
Volatility means it has life. So when I say volatility is vitality, it means it's alive. It means it can move. It means it can protect you. Listen, you can think of the dollar, instead of thinking of inflation and your groceries and your gas going up, think of the dollar going down. So if you're going to store your wealth in something that protects you against that, it has to be volatile because it has to reflect the dollar volatility. So I think if you're storing your wealth in something that isn't moving, that isn't volatile, it has no life. It's a dead asset. You want something that's exceeding the control of central banks. Again, central banks in the current existing financial system is trying to price control and suppress volatility. They're trying to control everything. You want something that lives outside their control. And I don't just mean distributed ledger technology. I mean the market performance and the market volatility. If you can't stomach the volatility, then you don't deserve to store your wealth in the thing that averages 63% year over year over the last decade. But what you're saying is just, again, it's a natural river flowing, no dams, no centrally coordinated market interference. It's a free market being free. And that's why it is the best expression of currency debasement. That level of volatility, like Bitcoin, if I take my building analogy, I walk into the ground floor of a building, Bitcoin's taking me straight to the penthouse. Like I can't get up to where I want to go in life if the thing isn't volatile and it can't move. And so if Bitcoin takes me to the 10th floor, then the 6th floor, then the 60th floor, then the 30th floor, but then to the penthouse, hey, I got there. What am I complaining about? That's just natural laws of life. I don't understand what people are expecting.
You need an express elevator that doesn't stop on other floors, goes straight up to the penthouse.
There's just no such thing, unfortunately. I get that people desire that, but I think it's just, naturally people think volatility is abnormal because central banks have, pressed that upon us. That's not true. And so as soon as you learn that volatility is natural, volatility is life, volatility is healthy, and volatility is the only way you can go up, then you get on board. You strap in, buckle your seatbelt.
So I want to then get your thoughts on Bitcoin as a currency, as a medium of exchange, as a form of payment, which is partly where Strike and Lightning come into this. And, the argument has been made that it's not being used in a transactional way, or it's hard to use in a transactional way when it's seen as a store of value, and more significantly, when it's now locked up in ETFs, in spot Bitcoin ETFs, that now you have, well, there are a couple of counters against that, but we'll start off with the idea that it does not then fulfill the Satoshi mission of being a peer-to-peer payment method when you have all of these big traditional institutional players holding the asset, and then people only getting exposure to it by holding stock in an ETF. What do you say to the idea of Bitcoin? And some are saying it's fine, it doesn't have to be a money if it's a store of value, but do you still think it can support or fulfill the idea of also being a medium of exchange?
Yeah, listen, I think that the point of Bitcoin is you don't have to have a relationship with anyone. In its purest form, there is no counterparty risk. If you elect to have a relationship with BlackRock, great. Maybe they build great products and services and serve you as a customer in the way you want to be served. Good for you. We have a lot of customers at Strike too. I mean, our biggest product line is customers all over the world buying and selling Bitcoin with us. That is still the predominant use case, is people want access to this asset. And so people elect counterparty risk with me, and we treat them well as customers, and that's their choice. But the point is, there's a choice, is that you can opt into this monetary policy and this asset without a relationship with me, Larry Fink, Jerome Powell, Janet Yellen. And that's the power, is that the monetary policy is set, can't be changed, and it's up to you. And that's the choice that the people have never, ever had with money. That is the separation of money and the state. And so that's the point. And so whether Larry Fink wants to make a product on it, anyone can do whatever they want, permissionless in every which way and form. So anyone can do anything on Bitcoin. It is their choice. As far as Bitcoin as a payment system, I think you're right. Listen, the store of value use case is so dominant to where in which people aren't naturally looking to spend their Bitcoin because it appreciates so much. So one of the things we focus on at Strike, and this is, like I said, our biggest business line is we're in over 100 markets. Customers buy a lot of Bitcoin from us, and we're seeing a giant wealth transfer from traditional assets and other forms of money into Bitcoin. But from a payment standpoint, we think of Bitcoin as a superior payments rail. I like to draw the analogy to gold. So gold, what's the monetary network of gold? It's human beings that have to walk the gold across town, or fly the gold to the other side of the world, or boat the gold across the ocean. The network in which you move the physical gold is just humans. And that's actually a huge downside of gold. One of the reasons it's concentrated and not actually been as performant as money. Bitcoin is bearer in physical and digital form. So its monetary network is a payment system on the internet. So now all of a sudden, instead of walking something across town, boating something across the ocean, flying something across the world, you can just send it over TCP/IP, physical money. And so in theory, that should bring the cost down and the settlement time down of everything, of which how we transmit value. And so we build technologies for customers in faster and cheaper money movement using the Bitcoin network as a payment rail, as opposed to something like Swift. And so that is where I think the innovation is. I do agree with you. I think it's going to take a longer time for that payment network to usurp things like Visa and Swift, because that level of changing consumer behavior is more difficult than someone that wants the best performing asset in human history, as even the United States deficits are getting so bad that financial markets are treating them like Nigeria.
Let's then talk about this issue of whether it's contrary to Bitcoin's ethos to be embroiled in the traditional financial system. It's supposed to be accounted to. It's supposed to be fully decentralized, supposed to be independent. Now, ETFs arguably make it more accessible on some level and have been positive for the number go up people. It's been positive for the price. But isn't it contrary to the ethos of what Bitcoin was supposed to be? You now have an asset that's pure, arguably corrupted by derivatives on top of it. All of these financial products, like ETFs, futures, spot Bitcoin ETFs, and the whole movement was supposed to be a way to get out of the traditional financial system after the financial crisis of 2008 and all of the derivatives of the mortgage-backed products that brought down the financial system there and brought on the financial collapse. And the Satoshi White Paper was all about coming up with a sound form of money, peer-to-peer, away from all of these spin-offs, away from all of these derivatives, away from all of these traditional institutions, away from these synthetic products. Do you think that the whole spot Bitcoin ETF and the involvement of BlackRock and the other players has moved too far away from the initial mission of Bitcoin?
No. I think the initial,
in a word.
In a word, no. I think the initial mission of Bitcoin is creating permissionless distributed money. And what that means is it's distributed in a way that no one can change the monetary policy. That's the whole point of decentralization, is making sure that no one can change the rules. No government, no central party, no corporation. Permissionless is an important property, but you have to understand it and take a second and appreciate it. Permissionless means someone in an emerging market can use it, and so can Larry Fink. The whole point and ethos of Bitcoin is anyone can use Bitcoin. And so if they want to build ETFs on it, great. Hey, I don't blame them. They're seeing the same U.S. deficits and macroeconomic landscape that I am. Good for Larry. I've been owning this thing for the last 11 years, and he's finally on board. I'm glad he's here. But who cares? The point is they can't actually manipulate or change anything, and it's permissionless in the sense that anyone can use it. It's open to everyone. Money has to be apolitical, right? Like we want to separate money and state, similar to church and state. And so it's not a problem that someone joined into the Bitcoin network, because who cares? They can't change anything. Just real quick, I think, gold bugs, there's a false equivalence from Bitcoin to gold. I think one of the problems with precious metals naturally concentrate in where they're held. And I think that it's easier to manipulate a market if all of the physical is concentrated with governments and with banks. If you look at Bitcoin data, all of the physical Bitcoin is distributed within the people. So you cannot manipulate this market with derivatives. You don't own the physical. And so the point is that an individual can physically own Bitcoin in their bedroom with a USB device or with 12 words in their head or on their phone right here. So the point is Larry Fink isn't a threat to the industry. He's just another market participant like anyone else. And
in theory, you can still take self-custody, and I totally get that idea, but we are seeing more and more people opt for the easier way, the retail option, and that's to have exposure to Bitcoin via an ETF, and then that is centralized custody with a BlackRock or any of the other players. In fact, I think we have a report from Bloomberg's ETF analyst saying that US Bitcoin ETFs are now on track to surpass Satoshis as the top holders of Bitcoin.
Yeah.
But the idea being is that, yes, I mean, I still hold my Bitcoin individually, and to me, it's not your keys, not your coin. But to people that are just learning about Bitcoin and get an understanding, it's easier to just buy spot Bitcoin ETF. And then that is, much like gold, concentrated with the institutions that have it.
Let's look at the numbers. So Satoshi, the biggest Bitcoin holder of all Bitcoin holders, in theory owns 1/20th of the Bitcoin supply. Not nearly enough to manipulate anything. One of Satoshi's greatest achievements, in my opinion, is how he was able to distribute Bitcoin to the people. If Satoshi released the white paper and then said, by the way, I'm working with Goldman Sachs and we're going to take Bitcoin supply public on the New York Stock Exchange in a month, then Bitcoin concentration would probably be a bit different. Jamie Dimon, Larry Fink, and the US government would probably have a sizable position. But the fact that the distribution through Bitcoin mining was able to be fair, equal, and global to the people means all the Bitcoins are gone. They're gone. There's only 1 million and change Bitcoins left to be mined. The other Bitcoins are already owned by people like you and I. So how in the world are you going to be able to build a Bitcoin position that grows to 30% of the supply, 40% of the supply, 50% of the supply? I mean, my friend Michael Saylor, God bless his heart, he's borrowing as much money as he can to buy as much as possible, and he's barely eclipsed 1%. 1%. That's not a material position to manipulate anything. And so Satoshi was able to distribute a currency for the people to the people. And that is one of the greatest achievements that Satoshi Nakamoto was able to pull off. And I think it's too late for any government or institution to try and build a material enough position in this thing, because Bitcoin doesn't have to concentrate. We don't have to give our gold, our Bitcoin to banks and custodians. We don't. And so I think it's too far gone.
We don't have to, but if there's more demand for Bitcoin, it allows these ETF providers to buy more Bitcoin and then at some point tilt it in their favor.
I just disagree. I think that they're so far from building a position in Bitcoin that would be 25, 30, 40% and able to manipulate the market. I don't think that building that level of a position is actually possible at this point. I really, really don't. I mean, Senator
that lets me sleep better at night. Jack, as I say, for me, I personally believe in self-custody, and I do think that the spot Bitcoin is contrary to the ethos. And so I wasn't a huge fan.
Look at Senator Lummis's bill. So Senator Lummis is proposing that the United States of America owns millions of Bitcoins, more than Satoshi. That position from the most powerful country and the most powerful military in the world still isn't big enough to do anything and manipulate anything. First of all, no one, no matter how much you own, can manipulate Bitcoin ever. Just to be clear to the audience, Bitcoin is a proof of work system. It's not proof of stake. So it doesn't matter how much you own of anything. Even if someone owned all 21 million, they still can't change the rules. But as far as market manipulation and price manipulation, even the United States is trying to propose a bill to build the biggest Bitcoin position in the world, and they still wouldn't come close to a material position the size to actually cause market impact. So I think, thank you, Satoshi Nakamoto. Thank you for releasing this on the internet to an email list and publishing the white paper and using the distribution mechanism for Bitcoin's monetary policy through mining, through just channeling energy that we all can contribute to, because now the supply is pretty much all gone and it's all owned by the people. And you're seeing that, by the way, in Bitcoin being an election topic. Politicians are literally trying to court our votes by appeasing our Bitcoin bullishness. That's a huge achievement by Satoshi. It's
definitely such a dramatic development to see how far we've come. Speaking of Satoshi, Jack, you have invested so much of your life on so many levels. Does it bother you that you don't know who Satoshi is? Do you have any idea of who Satoshi could be? Does it on some level sow a little bit of doubt that there's still this big mystery here?
No. In fact, I'm happy, content with not knowing who Satoshi is, and I hope I never do. One of the most important reasons that I think goes over people's heads is, listen, this person invented arguably one of the most important technologies in human history. If we're finally able to get money right, thanks to their creation, how much do we owe to this person or this group? And the one thing that they asked from us ever, they never asked for donations, recognition. They didn't want to be on the Time magazine cover of the year. All they asked is to remain anonymous. They very clearly did not want their personal identity to be known. And so as someone who's benefited tremendously from their invention, and I think the world will continue to do so, I owe them that much. And so I don't know who it is, and I don't care to know who it is, because that's the one thing they wanted from me, is they wanted to be left alone. And so I respect them for that. I owe them at least that. And I think it's also important for the growth of the currency and the asset class to have no sole leader. And so one of the best things that ever happened to Bitcoin was Satoshi walking away. And one of the best things I could do for Satoshi is not chase him and follow him because he wanted to be left alone.
Have you ever sold any of your Bitcoin?
Of course, unfortunately. I've got plenty of funny stories. My family and I bought... There's actually a painting in this other room. I can run and grab it if you want. I purchased for 6 Bitcoin. I bought it for like 10 years ago or something. And now that painting, I guess, is theoretically worth, hundreds of thousands of dollars, but not actually. So yes, I try not to sell Bitcoin when I can. I've learned my lesson, but of course I have.
What do you see then as a potential price point that you would sell your Bitcoin at again?
Where I would sell my Bitcoin?
Or not all of it. I mean,
never. I think Bitcoin in the next year, 12 to 18 months or so, 6 to 18 months or so, is going to go to the price range of $250,000 to $1 million per coin. I wholeheartedly believe that for all of the macro reasons that we were talking about.
In the next year, just repeat that, in the next year, by end of 2025, where do you see Bitcoin?
Between $250,000 and $1 million. And I know that range is big, but it's just highly predicated on the amount of liquidity. I actually start to lean more towards the $1 million side. I think we see it north of $500,000. I think it ends the year around 100,000. And then I think it really goes off to the races because the US is going to create a massive asset bubble because they have to. And inject so much dollar liquidity into the system because they have no other choice. And I think Bitcoin's the best performer there, like it always is, and runs way, way, way to the upside. Inevitably, like printing money isn't real growth. We know that on this show. So there's going to be a hangover. It's like drinking alcohol. You drink alcohol, you think every girl loves you, you think every song's the best, you think your dance moves are the best in the room, and then you have to wake up in the morning and realize how embarrassing you were. And so eventually there'll be a market correction, but I plan on holding all the way through like I always have.
All right. And you're seeing Bitcoin end of 2025 between $250,000 to $1 million. And I don't know, sober or not, I still think I'm a pretty good dancer. But
well, I'm not. Good for you.
But we will leave it at that. We're out of time. Final thoughts, Jack?
Buy Bitcoin. It's the only money with a fixed supply in the history of humanity. So do yourself a favor and own some in case it catches on, quoting Satoshi.
All right. We will have to have you back on soon. Thank you so much, Jack. Really enjoyed our conversation. Jack Mullers. And of course, I'd also like to thank you for watching, and a big thank you to our sponsor, Swan Bitcoin. I do want to highlight that Swan does have an IRA product where you can take advantage of Bitcoin's potential long-term benefits in a tax-advantaged account. And with a Swan IRA, you're holding real Bitcoin, not proxies. And opening a new Swan Bitcoin IRA, it's very simple. You can initiate a transfer or a rollover and then hold real Bitcoin in your new IRA. And there's a way to set it up that you are basically then buying Bitcoin on autopilot that allows you to take advantage of the price volatility and take advantage of dollar cost averaging as you accumulate Bitcoin into your IRA. Now, there's a link in the description with a special offer for Kitco viewers to help you facilitate that process. So if you're interested, make sure to check that out. And as always, thank you again for checking us out. If you're watching us on YouTube, please subscribe. And as always, leave your comments. We love to hear from you. So feel free to praise, whine, or just opine. For me, Michelle Makori, and the rest of the Kitco team, we'll see you soon.
On the Spot with Michelle Makori is brought to you by Swan Bitcoin. Swan Bitcoin IRA. Your legacy, your way. Real Bitcoin, not proxies. Traditional and Roth IRAs. Fast, easy setup. Start now at swan.com/retire.